All right, today we are diving deep into the numbers from TT International. And let me tell you, what seems like a simple financial report is actually a story that's been unfolding for a decade and a half. So let's get right into it. So let's start with this number right here, just over $1 million negative. Now, in the grand scheme of publicly traded companies, you might think, is that really a huge number? But trust me, it's what this number represents that kicks off this entire saga. You see, that's the company's net loss for just the first quarter of fiscal year 2026. $1 million just gone in 90 days. It's a pretty big deal, and it definitely makes you sit up and ask, okay, what's going on here? But here's the twist. As bad as that quarterly loss looks, it's honestly just a symptom. It's the latest ripple in a pond from a stone that was thrown all the way back in 2010. To really get what's happening today, we've got to turn back the clock. Okay, so first things first, let's tackle the immediate problem. We're going to look at these recent numbers and figure out exactly where the bleeding is coming from. So check this out. When you put this quarter's numbers right next to the same time last year, it becomes super clear. See that revenue? It dropped from $6 million down to $4.2 million. Ouch. Gross profit? Same story, took a major hit. And all of that just makes the net loss swell up from about $700,000 to that $1 million figure we just saw. And this chart really just drives the point home, doesn't it? A 31% drop in revenue, I mean, that is a massive blow for any company. The company themselves said it. This huge dip in sales and the lower profit that comes with it, that's the #1 reason for the big loss this quarter. So, okay, a bad quarter happens. But what if? What if these weak sales aren't the actual disease? What if they're just a symptom of something much, much deeper and more broken in the company's financial DNA? So let's do this. Let's zoom out from the income statement, which, remember, is just a snapshot of 3 months, and let's look at the balance sheet. This is what tells us about the very foundation of the company. You know, it's a simple question, right? What's a company actually worth? Well, in the world of accounting, it's pretty straightforward. You take everything the company owns, all its assets, and you subtract everything it owes, all its liabilities. That number you're left with, that's its equity, its book value. And this is TT International's total equity. And yes, you are seeing that right. It's in parentheses, which means it's a negative number, negative $317 million. This number is just staggering, and it is the absolute key to understanding just how much trouble this company is in. So this puts the company in a state of what's called negative equity. To put in plain English, it means they are deeply, deeply underwater. If TT International decided to sell everything tomorrow, every warehouse, every product, every single thing they own, they still wouldn't even come close to paying off all their debts, not by a long shot. I mean, a $317 million hole in your balance sheet doesn't just appear overnight. This is the kind of thing that builds up over years and years of debt and financial problems. And this is what takes us to the real heart of the story. So now we go back to the beginning. Back in 2010, the company started something called a scheme of arrangement. It's basically a formal process overseen by the courts to try and sort out its massive pile of debt with all the people it owes money to. This timeline really puts it all into perspective, doesn't it? 15 years. Think about that. For 15 years, this company has been trying to fix this debt problem. By 2017, things were so bad they had to get a moratorium from the court, which is like a legal shield to stop people from suing you for the money you owe them. They even thought they had a solution, a new investor, back in 2019. But that deal completely fell apart 4 years later. And here we are today, still going to court, still asking for that protection, still looking for a way out. And you can see what the strategy was from this quote by the board way back in 2017. They just needed breathing room, right? The whole point of this legal protection was to give them some stability, to buy them time to find a total solution. But it's now 8 years later, and that total solution is still nowhere in sight. All right, so after a decade and a half of just trying to stay afloat, what does the future possibly look like? Because here's the thing, even if they somehow magically solve that massive debt problem, they're facing a whole new mountain of challenges just to run the business day to day.
And this isn't me saying it, this is what the company itself is reporting. They're up against a really tough retail industry, their profit margins are getting squeezed, costs are going up everywhere they operate. And on top of all that, finding people to work in Singapore is getting harder and more expensive. So you see the problem? Even if they get a fresh start financially, the actual business of making money is going to be an incredible uphill battle.
And really, that's the question I want to leave you with. When a company spends 15 years, a decade and a half, just trying to survive, with a balance sheet that's hundreds of millions in the red and a brutal business environment ahead, what does a win even look like? Is there a finish line to this race? And if there is, can they possibly ever get there?